Nvidia earnings are out and it's been another bumper quarter for the company. Good morning, welcome back. As promised, it's going to be a US focus today, particularly on Nvidia earnings. The announcement last night was taken well by markets. Q2 earnings were up 125% from the same quarter last year. In dollar terms, just over 30 billion in revenue. And the guidance for the coming quarter was equally strong. Revenue is expected to get close to 33 billion, which would be up 80% from the same quarter last year. But therein lies the rub. The growth in quarter-on-quarter earnings is beginning to slow. So whilst the company is still experiencing supernormal growth in both earnings, sales, profitability, there is a tail off in that growth, and it's becoming more difficult for the company to beat already jubilant analyst expectations. So we may well be seeing the last of the hyper-normal growth cycle for Nvidia, but it's still very much a market leader in terms of its share performance over the last couple of years, and it's still at the vanguard of AI tech development. Elsewhere in the United States, data this week corroborates that the Federal Reserve are likely to begin cutting rates from next month, and that it's appropriate to do so. The Richmond Fed Services Index is a very timely indication of services-based employers' intentions for future employment. And that conditions survey has actually turned negative. Every other time in the last 25 years it's turned negative. The Federal Reserve have usually begun to cut interest rates. And in fact, that's what the Fed signalled last week, that September is going to be the most appropriate time for them to begin to lower the reference rate. And in fact, they are likely to begin to cut rates at every meeting for the next year at least. Policy rates are very restrictive in their own terms and so should be considerably lower given the path for inflation in the US is likely to be much lower and go towards 2%. Which takes us neatly on to data released this morning from Spain, which was the CPI data for the month of August. This is the first CPI print we've had for the month of August from countries within the G8, and it shows a further decline in Spanish inflation towards 2%. So the mini boost that Spain has had in inflation from the summer last year through to the summer this year has faded, and inflation is now below 2.5% and is falling towards 2%. So that should give the ECB some early indications and corroboration that another interest rate cut there is perhaps appropriate when they meet in the next couple of weeks. So all in, a strong day for data from the US and also some cooling in inflation data, which should help the ECB when they begin to cut rates again from next month. That's all for today. Take care and please join us again tomorrow. Thank you.